First of all, on the banking action, we do believe being positioned on banks was a kind of a consensus trade. Therefore, part of this movement is clearly a taking profit action by market participants. Having said that, you need really to distinguish what is happening in the United States and what is happening in Europe. Because, for example, from a regulatory point of view, it is really different. It's much more transparent what we have in Europe. Having said that, the decision to go case by case in the United States, because as Mrs. Yellen said, there won't be any blanket. It will be a case by case solution, is a kind of worrisome, in particular for the spillover to the lending to the real economy. This is one of the reasons why, for example, we've been reducing our growth expectation in the United States. When it goes to Europe, more regulation, more capital are definitely a good safeguard. But then we need the ECB to be patient in the hiking rate cycle.
The connection between the performance of banks and the credit extended to the real economy is clear and understandable, and I think we all appreciate how critical they are to provide the lifeblood for economic activity. Is that being, do you think, appropriately priced in markets at this stage? You've clearly made the point that you see it in the United States, but is it also well understood, do you think, in other markets?
Well, markets are quite nervous, extremely volatile. If you look at what is happening, not only to the expectations on forward guidance, the market has been repricing brutally what the Fed should do. For example, the 2-year level is today consistent, according to our fair value calculation, to a 4% terminal rate. This is for us by far too much. So possibly the Fed will cut rates in case the situation in the banks will deteriorate further. But this is not our base case for this year. It is difficult to see how much pain the restriction to the lending and the steep change in credit condition will spill over to the real economy. According to our calculation, is 0.5, but obviously this is open to downside risk.
Monica, we've all spoken a lot more about AT1s and CoCos than we've ever wanted in the past number of sessions, and I think there's still a big debate about the wash-up, given the hierarchy that was challenged by the Swiss, and then distancing from that type of response from other regulators. Tidjane Thiam has been writing about this, the former Credit Suisse CEO, and effectively that it puts the onus back on regulators to come up with bank resolution. Just give us a sense as to where you think this story goes over the next number of months as investors digest how those AT1s were treated.
Well, the Swiss case was really calling surprise across investors and also regulators, because soon after, on the European side, they said, no, look, this is on Switzerland. When it goes to European regulation, this won't be the case, as honestly, we think it's a consistent message for bondholders. So we think that regulators will stick, and this is clearly one of the plus when it goes to the regulation.